With economic tremors in Greece and a stock market meltdown in China, India is back in focus. It is one of the two fastest growing economies along with USA. And if you're blessed with a spell of good monsoons and a benign oil regime or prices, we could well climb above the 8% GDP growth mark, according to a recent statement made by the Finance Minister Arun Jaitley. That's definitely good news for the otherwise tepid commercial and office real estate market in India. Office demand is closely correlated, we all know, to GDP growth. The question we're asking today on the Realty Debate: is it too early to start feeling optimistic, considering 2015 is also going to see large new supply of office space in key cities across India? Or is it time to start looking for green shoots and spot out the big baggers in the coming years? With me on the panel today, Anuj Puri, Chairman and Country Head, JLL India; Sanjay Dutt, Executive Managing Director, South Asia, Cushman & Wakefield; Mayur Shah, Managing Director, Marathon Group and Vice President, MCHI Credai; Mike Holland, CEO, Embassy Office Parks, joins us from Bangalore; Kalyan Chakrabarti, Managing Director, Red Fort Capital; Amit Grover, National Director, Offices, DLF; and Sameer Jasuja, CEO and founder of Prop Equity. Now, before I start the discussion, just let's look at what's happening. What are the pulls and pushes? Positive economic triggers. We talked about the economy. Now, IMF has pegged India's growth for the current year at 7.5%, which will be higher than China's at 6.8%. And number of articles which are saying that even this 6.8% is a big suspect when it comes to China. Finance Ministry and RBI are actually estimating higher GDP numbers at 8.85, that's a very optimistic finance minister, and 7.6, a more believable RBI governor. The Reserve Bank has lowered its policy rates by a total of 75 basis points with 3 cuts this year, hoping that banks would pass on the benefits to the economy. That should be a big trigger as well. Industry, we all know, is waiting for the passage of GST. It should come up in the monsoon session of the parliament, and this big figure, capital expenditure by the government and public sector, is up about 75,000 crore rupees this fiscal. There are more funds to be raised from infrastructure bonds. Now, the not so good signals. The latest data released by Reserve Bank shows that the overall lending by banks to commercial real estate fell to 8.5% during the period ending 30th May 2015 compared to 12.7% for a period of 1 year ending 30th May 2014. Also, look where the markets have gone. But Realty Index remains the worst performing amongst all the Indian indices, giving its investors negative returns of 18% since its inception in 2007 and is hugely underperforming the benchmark indices. So lots of pulls and pushes. I think the good news is, and I'm going to come to Anuj, I always do, some resilience in the economy, Anuj Puri, and you've been saying commercial and office space is looking good as an investment, but 2015 is also going to see the largest addition of office supply in key cities. How will these two play out?
I think, Manisha, you've set the tone very well and you've covered a lot in your opening remarks. If I can add one more critical point onto that, a lot of the demand that is there in the office also comes in from the back office of US multinational corporates who operate in India. So since 2005, every year, US corporates take more space on lease than Indian corporates. And that is a very important data point, given the way that the US economy is growing and the way that these US corporates are continuing to outsource, particularly where Mike is sitting in Bangalore. It is just outstanding what we have seen in the last 18 months since the growth in the US economy. So that's one important data point because they're a very large occupier and they continue to grow. The second point is, Manisha, in 2009, if you were to look at it, and you were to split the supply, 66% was residential and the balance 34% was commercial and retail. When you look at it at the end of 2014, 84% is residential and 16% is only offices. And that's the reason why residential is having an issue at this moment in time because of the oversupply. And given that the Indian economy is doing well, plus the US back office is doing well, coupled with that, there is very little new supply coming in. It is true what you're saying that there is volumes that are going to hit in 2015 in the market, but I can tell you this volume is all pre-leased. There is nothing that is coming up and getting delivered in the market where we would have an opportunity to go out and lease. So clearly that this segment, I can tell you, is, I think all the panelists who are there would be very buoyant, optimistic, and I think, you know, for the first time you will see a real estate session on the show, Manisha, which will be a lot of people smiling and laughing and, you know, very optimistic.
I know Mike has a lot of reasons to smile. I'm going to read out some of the figures a little bit later. But Sanjay, let me bring you in and ask you. So would you agree with Anuj? A very interesting data point that US companies are large occupiers, and the second point that the 2015 fear of large amount of supply is already pre-leased to, let's say, the maximum extent it's possible at mid-year.
So I would agree with Anuj, and at the same time, you know, throw some more light on this subject. We have nearly 73 million square feet which will be absorbed in the whole of Asia, which means from Tokyo, Seoul, Shanghai, and every city in India. 50% of the absorption will be in Indian cities. And that's predominantly because outsourcing industry and technology, e-commerce, and also cloud-based services of various technology companies are driving the demand. And they're in the growth mode. And therefore, I think the supply that exists today will be more than met. In fact, there are 6 or 7 micro markets in India, whether it's Cyber City, whether it is Lower Parel or Goregaon, or Outer Ring Road, Bangalore, or Taramani, Chennai, or Kharadi in Pune, where the prices have already gone up, Manisha, for rents, and very soon capital values. So this trend will continue. The only point of difference I would make is that we actually very recently put our research together. And you know, I go back to those days in January 2008, which was the peak time of office absorption in India, which was 40 million square feet. And at that time, the supply was nearly 100 million. But because the sentiments were melting, the supply went out. People just switched from office to residential, and it came down to 50 million. For the first time, we were able to capture our research, which goes into next 5 years, and we see 106 million square feet of office supply under planning and construction activity right now. So while in the short period of time there will be an absorption will be very good and rents will go up, but from medium to long term there's also a lot of supply coming, and is also a factor of herd mentality in India, where once a segment starts to do very well, the whole industry starts following the same direction. So I'm just worried on that front. But for now, these are good times for office market.
Okay, so now I'm a little bit worried, Sanjay. You're saying over the next 5 years, you will see another 106 million square feet of office space coming into the market, which means that the window for actually capital appreciation is pretty much 2015 and maybe early 2016 or all of 2016. That's it. And again, you will start seeing a lot of supply. Is that what you're surmising?
So I will qualify right now. So if we were to just assume that there will be no further growth from 35 to 36 million square feet absorption in 2015, I would say yes. But we think that the office market may actually cross the previous peak of 40 million square feet, which happened in 2008. In that case, I think the supply will get absorbed. And you know, by the way, these are a lot of projected supply, Manisha. You know, to complete the projects, to actually deliver, takes 3 to 4 years. And we've seen that in the past, that supply not necessarily goes in a manner that they forecast. So a bit of caution and qualification there.
Okay, fair enough. Let's just take a quick look at some of the numbers of what happened. So 2008 is too much of history for us to go back. Top performers, and this is Cushman data, 2013 relocation and consolidation dominated majority of leasing activity in 2013. Now, Bengaluru recorded the highest relocation activity. NCR bagged the biggest share of the leasing pie with 5.1 million square feet. Now let's come to 2014. What happened? Bangalore emerged again as a clear winner, dominating the office space leasing performance with 8.8 million square feet in 2014, and NCR followed with a lease figure recording a decent 6.2 million square feet. That's perhaps the reason. I mean, 2 data points, 2013, 2014, and come 2015, Bangalore seems to be ruling the roost. Perhaps precisely the reason why Bangalore debuted on JLL City Momentum Index CMI 2015. That's a global survey. And interestingly, this city also pipped other Asia-Pacific cities in demand for office spaces. Mike Holland, good time for you to be heading office space business for one of the largest developers in India in this business, Embassy. Tell me though, the big question everyone wants to know, when are rentals going to come back to 2008 figure? You know, you read these headline figures in media saying they've still not come back, but is the ground reality different?
Yeah, I think for sure. Bangalore rentals are already at levels that would be higher than 2008. And we've seen probably a 40% appreciation from the bottom of the market on the outer ring road main business parks. So as Sanjay rightly said, I don't think it's a question of whether green shoots are there. This is the Garden City, and there's plenty of activity coming from this market, and it's no surprise. If you look at the NASSCOM projections, they talk about the exports from the IT industry doubling over this 5 years from 2015 to 2020. So if there's 100 million square feet comes in over that period, as Sanjay suggested, we're still going to be in a position that all that good quality space will be absorbed. I think there will be a problem for space that is standalone and of poor quality, but for the leading players and the leading business parks, there's certainly going to be, not just this year, but for the next few years, there's more demand than there is supply for sure. And we'll see rentals continuing to firm up as a result.
How much have they firmed up? If you were to take 2012, 13 and 14, would you say even if it's marginal 2 to 15%, it's an upward line, Mike?
Oh, for sure. I mean, there's no question in the main IT markets in Bangalore, I think we've seen 20% in the last 18 months.
20% in the last 18 months. So I'm wondering which is the market which is pulling down the national averages. So let's bring in the other big daddy in office space, that's DLF, Amit Grover. What's happening in your market? NCR has also found mention, at least in terms, Bangalore comes first, NCR comes second, and Mumbai a close third. So tell me, I mean, 20% is really definitely not happening in NCR right now, though it looks more modest of 8 to 9%.
Well, somewhat higher than 8 to 9%. We've been scoring about 15% average rental growth in the last 3 years. And NCR market has been consistently boosting about constant good manpower pool, which is coming from all the North Indian states, and the fact that the infrastructure supply and the ecosystem which the entire workplace solution needs is well provided here. Clubbed with that, the overall lifestyle, the quality of life, which is substantially improved in the Gurgaon area, which is why you see a consistent increase in the multinational footprint, which is either growing and still larger companies coming in. So both from quality of space, which which Gurgaon delivers, is substantially good. The overall safety, security, infrastructure, and more importantly, the metro connectivity to the business districts. So in totality, the overall solution of a work-life balance is still delivered by NCR by good quality infrastructure. So we are now sitting at 98% occupancy in Cyber City. So it's a no-brainer that this 15% can match up with Bangalore very soon to 20%.
All right, there comes a smile. 20%, that's the magic number. But Mumbai definitely is a bit more mellow. Mayush, run us through what's happening in the Mumbai office space market. So we just carried recently a trend story saying that even BKC is now moving out to secondary business district. There's good quality office space coming up there. What do you think in terms of rental values and capital appreciation? How's overall office space in Mumbai looking?
Manisha, Mumbai, specifically city side like BKC and Lower Parel are catering to mainly BFSI and services industries. And what we have been seeing for last 9 to 12 months, there is a extensively high absorption, And if you look at last 3 to 4 years, there was no new supply which was planned. So whatever was, even if you look at where Lower Parel, where at once upon a time was supposed to be a huge oversupply situation 2 years ago, we have seen a very good absorption happening in Lower Parel because, and there also the prices after the lowest of 120 or 130 square feet rental per square feet to now move to 160 to 180. Even BKC is now in around 200 to 250 rupees square feet rental. So there is a good positive environment after the new government taking place, and we have also waiting for the new banking licenses. Well, Mumbai is predominantly depending on BFSI, while suburbs and outskirts like Thane and Malad and all are an IT specific market. But everywhere the vacancy level has come down substantially down. I think everywhere it's like 85 to 90% occupancy is now in Mumbai.
All right. So just so that our viewers don't think that the picture is so rosy, all markets are looking good. We also have some of the worst performers over the last 2 to 3 years. Now, some markets haven't taken off. This is really not a figure of all India. So you've got Mumbai looking good, Bangalore looking fabulous, NCR. Now, when we say NCR, I think we totally have to qualify and say it's Gurgaon. Noida, Greater Noida, still not looking very good. But we're just going to flag off some of the worst performers. Surprisingly, Ahmedabad in 2013 was the worst performer amongst top 8 cities. I'm wondering whether GIFT will change it in 2015, but it simply did not take off. I'm not going to read any more figures. Kolkata also in 2014 earned the distinction of being the worst performer by leasing out just 0.7 million square feet of office space. Compare that to 8.1 million square feet more that Bengaluru leased out. So you know how much Kolkata is losing out. So Kalyan, just look at the overall market. Where are the big opportunities? Yes, they're in Bangalore, they're in Gurgaon and Pune and Mumbai, but there are other markets that you would keep an eye out for?
I guess we do keep an eye out for other markets. Having said that, the local architecture of how the political things operate, how the approvals come through, and the process of what feeds all the space requirement, like talent pool availability, social infrastructure and all of that, does give a big problem to these cities like Calcutta. GIFT City, you probably are right, there is some amount of vision which has gone into it. So, I think as long as the social infrastructure can support it, employees are willing to kind of relocate and work out of that place. It will see a slow and steady growth. I don't expect it to be a windfall for GIFT. Calcutta, same problems. Historical issues with respect to how the
local government. So which one are you keeping an eye out on?
I guess the usual suspects, Bangalore, Gurgaon, Chennai, probably the OMR, particularly the first toll gate area, Perungudi kind of areas.
Okay.
So the usual suspects are where we kind of keep our focus on.
All right. Now, I'm going to take a break and come back to Sameer. Now, some of the key emerging trends in office-based real estate which make for a compelling story. The e-commerce buzz, I want the panelists to actually talk about how big this buzz is going to be. Right now, I think overall office pie is just 7%. How much could that grow? In Hyderabad, Sameer's pet city, becoming one chosen or a chosen one for biggies like Google, Amazon, IKEA and Uber. So that's another one to keep an eye out on. So stay with us. The discussion gets much more interesting. The other big question we need to ask right now, if you've got the money, should you actually now be looking at commercial office space and not residential? We'll get the answer in just a minute.